Let me introduce one of today's guests. The first thing Wikipedia and Google will tell you about him is his work in philanthropy. He has been the ambassador and patron of a number of charitable organizations. He has worked with UNICEF and is currently the chairman of the Sustainable Business Forum. Needless to say, he's a very successful businessman. Such as his commitment to new ideas and invest opportunities that promise better tomorrow, that he skipped the Davos Economic Forum just to be here with us today. So dear startups team, with no pressure. Ladies and gentlemen, here is Oliver Rotschild. Welcome.
Hello. I didn't quite know what the stage was going to look like. That's one of my main problems, is I should always look at the stage. So, dobre dan. I am so pleased to be back here in your beautiful city, Ljubljana, which has assumed now the mantle of the European Green Capital for 2016, and that I've been invited to speak here again at this worthy ABC Accelerator Demo Day for a few months after my previous speech here during the Ljubljana Forum in October. Today, I look forward to hearing from you, the cohorts of the second ABC Accelerator Demo Day, selling yourselves and your product today to the many investors who have come to hear your story. I will speak about innovation and entrepreneurialism, the scene that I've observed in London and in the UK, Europe, China, and the US's Silicon Valley, from where I have just flown in yesterday. It is this scene, this commercial sector of business where disruptive industries, science, and innovation generates the whole fabric of society. It influences our daily lives, making and causing changes to the socio-economic scene, affecting our decision-making and our time, thus causing game-changing influences we see become part of our lives. This economic scene has an ever-increasing dominance in the world of business. This is where we should have seen the stage. Commerce and finance. Also in the manner in which many now work in this new space. All part of this ecosystem of which new, vibrant innovation is playing a major role in the changing behaviors we go about our work. There is no one name for this new economic activity, whether it's the sharing economy, gig economy, or on demand. Look at something like Uber, now valued at $60 billion, what's a few noughts. And all this without employing any of its drivers. In one sense, the story about innovation and entrepreneurs and investment is much the same as we've seen elsewhere around the world now, as well in the rest of Europe. Added to that of the recently accelerated interest and support seen in the Far East, India, and of course leading all the way in this, the US. We can now see this undisputed interest from old and new established businesses, despite their previous antipathy, to join the ride and accept that disruptive ideas and innovation is the way forward these days. Last year was a record one in this space globally, but starting around the second quarter, the number of deals began to decline while dollars being invested increased. Then in the fourth quarter, both fell dramatically. Europe itself didn't get the biggest swings of the mega deal, unicorn wave, compared to the United States and Asia. But that means it also doesn't have quite so far to fall. Europe reliably does about $3 billion a quarter. It's dominated by my country, the UK, although there is strong evidence that Germany was catching up, pushed by a few mega deals. When you look at the three major hubs in Europe, the UK is the most solid and stable. Germany is definitely developing a penchant for deal-making now. Examples include Delivery Hero and HelloFresh, two of the biggest funding recipients of the year. Scandinavia is the creativity, design, and gaming powerhouse, but hits from there can be mercurial, fad-driven, and burn bright. Yet individual hits like Spotify and Supercell can skew an entire market. London has a healthy mix of enterprise, consumer, healthcare, and returns have varying degrees of success. However, having seen what you're doing here today and what I will see later, I can see that Slovenia has a major role to play. Of the three big centers, the UK and possibly Germany will certainly fare the best in the downturn, about which I'll address later. All three markets have something going for it. Increasingly, they aren't nearly as dependent on Silicon Valley money as they used to be. Sure, Valley money, where I've just been and seen the huge strides made there economically and environmentally, is coming in and cherry-picking the best deals with A, B, or C rounds and higher prices than locals might pay. But Europe has never been less susceptible to a slowdown simply because US money decides to pull back and focus on companies at home. Throughout these major regions, none of the most active investors were Silicon Valley companies. Again, in the UK and Ireland, they included Enterprise Ireland, ICE, Mass Challenge, Octopus Investors, and Seedcamp. And soon, I'm sure I will hear about ABC as well in that league. In Germany, there were high-tech Gründerfonds, VentureKick, Rocket Internet, which has just completed a further round, $420 million startup fund, and Holzbrink Ventures. And in Scandinavia, there were Finvera Venture Capital, Stockholm Innovation and Growth, Danish Tech Challenge, Tekes, and North Zone Ventures, according to Pitchfork. We need to think how effective the last few weeks in the turbulent markets may have changed investor sentiment, and also how to combat the rising disenchantment of international stock markets which has swept over the world, primarily because of the worsening financial news coming out of China. And surprisingly, the negative effect that the huge reduction in oil prices have added to this despondency. I was tempted to rewrite quite a lot of this speech, having seen what has happened in the last few weeks in the market. The turbulence in the market has no doubt affected sentiment. Investors in conventional businesses and established markets have taken cover. There is certainly more circumspection in investing recklessly or without some due diligence being performed, even in early stage investments. Today, it was reported that Sheryl Sandberg will urge Europe to create a pro-innovation environment unhampered by poorly designed regulation, suggesting that the continent is cutting itself off from the digital revolution. Also, that fears about new technologies disrupting existing and established industries' livelihoods was misguided. I agree with the second statement, but her first, not so. Look at what we are discussing today in Ljubljana. There is a huge industry which has been created within this technological revolution. Even in China, where we see and hear about poor economic performance, in their terms, I don't think any Western country would begrudge a GDP of 7% being reported daily. They have over 4,000 innovation centers, which have been set up in the last few years. What they suffer from in China, is that they do not see the innovation that we have here in Europe, and also in the US, of course. And they don't get it. They are short of inbred, domestically originated innovation, which we see here. Here in Europe, we have plenty of what I call fresh stock, just needing to find the right financial benefactors to allow their ideas, propositions. There we go. I really need something. There we go. These startups to move forward with financial help, and thence and from there go to the maturing stage. True, some startups have had their wings clipped recently. Nano and bio are no longer the superstars that they were last couple of years. These are being rapidly replaced by other innovations such as cybersecurity, fintech, e-health, and edtech. How much has the revolution in 3D printing changed innovative ideas? It was unknown a couple of years ago. It's now part of the techno ecosystem. I won't even detail as to how cloud computing has radically changed the way in which information, access, and storage are processed. The investment market into innovation and what is now commercially called disruptive industries has grown hugely, as we now can all see. Many factors have influenced this, which has turned logical investment decision-making on its head. I will list some of these. Many of the investments made in this space are into IT or technically based businesses, often now known as intangibles, such as apps or algorithms, where the value is in the IP, a totally new asset class now in core business. 2, when these are identified by the new team and written up by their legal advisors, there is still no guarantee of either real value, protection from theft, or market entry, or consumer use, or even sometimes the need itself. 3, many of the angel investments were and still are middle-aged, not me of course, and still need educating about this new asset class. Many of them, 4, when they made some of their original investments a few years ago, would have had no clue of the actual merit of the proposition, but followed others whom they rated as having investment experience in this new arena, or simply just lucky decision-making, or some who've had varying knowledge of the particular market. 5, true, investors are still ready to take a punt, a gamble, knowing that many of these investments may not be successful. 6, many investors have now become mentors, advisors for the early stage initiatives. They will see when asking for finance this ever-growing number of investors, having now had more experience of this kind of investment scene. 7, many are prepared to follow and to back with investment when the new initiative has gone through a boot camp, an accelerator program, incubators, etc. A hurdle for these startups to have been accepted. This hurdle being an entry requirement and therefore a modicum of comfort for the investor. 8, seasoned investors are ready to accept investing in companies which may show no revenue or even immediate foreseeable revenue, such as WhatsApp and Instagram, to name the most prominent of these. 9, investors are now prepared to offer full hands-on participation and advice. And 10, finally, I say this tongue-in-cheek because the early stage of development, if an investor consults and totally listens to his financial advisor or accountant, you, the startup, the early stage business, you know that you're wasting your time engaging with them. This is a new world away from conventional business decision making. And here are some hints for you in the audience who are investors. The presentation is all important. This is the first impression factor. You need to get it immediately. Otherwise, you are struggling from the start and will be turned off. 2, the presentation needs to be easily understandable. It's prose, it's language, not computer science speak. That will sound like gobbledygook, especially if the same presenter is the same one who will later sell his product or idea to the potential customer further down the line of the company's development. 3, you, the presenters, You need to practice and to update your presentation, continuously questioning it. 4, try and say something memorable. The regular and seasoned investor is getting very used to seeing many presentations. Make yours stand out. 5, your financials are part of a discipline of business plan, which is necessary for your own focus. Many times it will contain various assumptions, some of which will prove unsustainable or unsubstantiated, widely unrealistic when applied in real operation, or even sometimes they're too modest. This is not the end, because the investor knows you have tried to forecast and made attempts of financial order, ensuring that you've acknowledged to include some financial reference in your presentation. Be prepared to substantiate some of the wilder predictions made, and do avoid these. These will not serve your ambition for investment well. And I think one of the other things that's most important, look smart and kempt. Poor visual impressions are fatal. Looking good and confident can get investment, sometimes against all the odds. 8, founders and originators do not necessarily make the best CEOs. Be prepared to relinquish that role when it is necessary for the good and growth of your company. And to the investor, I say this: the new innovation and entrepreneurship that we are witnessing is not only exciting and stimulating, but is an ever-changing evolution. Nothing ventured, nothing gained. It can make you substantial profit, as well as satisfaction in what you have supported in this unconventional or disruptive scene. And you see your investment, your baby, grow into a successful adult. To those seeking investment, remember, he who dares wins. Or if you should experience failure at your first or second attempt, try again until you succeed. Never give up and believe in yourself. I wish this conference a huge success, and that from this meeting of like-minded decision makers, investors, innovators, and entrepreneurs, a real positive outcome happens, which is initiated and stimulated here, that is sustainable and far-reaching beyond this city and country. I look forward to seeing and hearing about initiatives which have been encouraged and supported as a result of the stimulus of this event. Thank you. Kwale.